Welcome, gold traders, to the Gold Hourly Volatility Data Service for intraday traders. We hope this message finds you in great health and uplifted spirits. The data service IMTS provides is not independent of our other services in your ongoing training. All services and training are here to help you see the whole market. Using them together, you become a consistently profitable trader. That's only by applying what you have learned on a daily, weekly, and monthly basis. This guide here will show you how to use the IMTS hourly data service for gold. Now, this service is best used with the daily range and session range data. First, be sure you have to know your broker's server hours on the platform you're trading with, and then you have to convert them to your own time zone. Here's an example. This is the TradingView Oanda broker spot gold. And on their daily server, their hour 2300 starts the next day. So if we put the horizontal line on the 2300 and the vertical line here, then we can see if we go to Monday, January 2nd, go. Then we can see that the Oanda server actually starts their day at 2300. So what you're going to need to do is go to your broker or whatever platform you're using and see what hour your broker starts their day. That would be the first thing you must do to use the hourly data services. Alrighty. You also need to decide the session that you will be trading. You can use this data along with the daily range and session data to give you an advantage during the trading day. We're going to go over some examples using the New York session because that's the session we trade for this training. But you can apply this training to each training session. So if we go over to the spreadsheet for gold, this is all of December 2000 gold hourly volatility December 2022. So this is going to be all of December hourly volatility through every trading day through December. Now we've highlighted all the sessions. The New York Open starts at 1300 from December 1st all the way down to December 30th. London starts at 8 o'clock. And then if you go over to the Asian session, the Asian Open starts at 00 on TradingView Oanda's time. And let's go ahead and make sure that that is correct, highlighted. All right. So we're going to jump in some examples on how you'll use this data to give yourself a huge advantage on trading the New York session intraday trading. We're going to start with the New York time zone 1300 in December. And we're going to go over 3 days. We're going to look at December 1st, December 2nd, and then December 5th for our example and how we can use this data. So in the guide, you'll have the if you click on the table right here, it'll take you straight to the spreadsheet that we just reviewed right here. And then if you click on the TradingView chart, then you'll be able to pull up a chart showing the 1300, 1400, 1500, 1600, 1700 hourly data. Now we're going to jump in how you're going to use this data to have a great advantage during your intraday trading. So for instance, let's look at December 1st. December 1st, 1300. Let's go to the chart. December 1st, 1300. December 1st. Go to. All right, this is the trading day for December 1st, 1300. This is the 1300 hour where the New York session opens. Now we know during the New York session a lot of volume comes into the market. So how are we going to use this hourly data during this trading session so that we can have favorable trades? So 1300 did 769 on December 1st. Here's what we're going to look for. We want to look for trends in the data during the trading session, either the New York session, the day, the week, or the month. Now, when you continue to come back to learn from the daily range and the session range, then you'll start seeing a pattern where you can actually use all of this data to start planning your entries, planning your stop losses, planning your trade values, and planning your profit targets. So in this example, we see between the hours of 1300 and 1600 on each day, the price moved at least 500 pips on the low end average, and at most 2,500 pips on the high end average for the 3 days observed. All right, so let's review where we got that data from, and then we're gonna show you how we're gonna use that data. So December 13th through the 5th, on all these 3 sessions, we have 769 pips, 1,429 pips, 1,400, 990 pips, 661 pips. The low end is 360, that's 1,800. And we're really going to focus on between the hours of 1,300 and 1,600. So between 1,300 and 1,600, we see 1,300 moved 2,000 pips. We see 1,600 moved 1,000 pips. And that was consistent for these 3 trading days. 1,300 moved 700 pips, 1,500 moved 1,000 pips. So how can we use this data to give us an advantage when we see the New York session starts? So we know that this bar right here for these last 3 sessions has not moved less than 700 pips. So if we enter a trade long here, then we can probably say that using the data over the last 3 trading sessions, that this price should move at least 500 pips. In the last 3 days, it's moved 700, 1,300 here. The 1,300 hour here moved 2,500, and then the 1,300 hour here the 1,300 hour here moved 700. So in these 3 days, at the start of the New York session, you have a 2,500 pip move, you have a 700 pip move, and then you have a 1,300 pip move. Now this direction went up, this direction went down, this direction went down, and we'll talk about hourly direction here in another video. But the importance that we want you to see right here is that over these 3 trading days, and we're going to create another video for the beginning of January, we have seen the 1,300 hour move no less than 500 pips. So what that will allow you to do is you can start planning to say, we know this has moved no less than 500 pips over the last 3 days. We can set a profit target now for 400 pips, and then you can start planning your stop losses, and then you can start planning your profit targets. Great tool to use. So that's one thing you want to look for. That's the example that we just went over. So we see the hour of 1,300 has not moved less than 700 pips over the last 3 trading days. Here's another example. Between the hours of 1,500 and 1,600, price has moved at least 650, at most 1,000. So again, let's go ahead and go to the chart and look on those 3 trading days. That should be December 5th. Take into consideration that's a Monday. First, this is Friday, and then Monday will be the 5th. So on these 3 trading days, if we look between the hours of 1,500 and 1,600, we'll see the average move here, 1,500 to 1,600. It'll be actually 16 to 17. So that's 1,500 there. on the 5th. On the 15th, 1500, 1600, all the way up to 17. That's 1,700 from 1500 to the hour of 1500, 1600. 1,500. 1,700 if you add 17. And then from the hour of 1415, we have a move down of 900 and a move up of 800. So that's a 1,000 pip move down. That's a 1,000 pip move up. Now we're going to get into the swing data, and we're going to show you how to combine the swing data for the New York session with the hourly volatility data. So what advantage does this give you? Let's say you started this trade at this supply demand support resistance zone right here. So you know this is a supply demand support resistance zone, and we will train you on the supply demand support resistance zones. If we just looked at the hour of 1500, we would know that over the last 3 trading days, 1500 has moved no less than 600. So we can place a trade starting here. We can sell gold, and then we could set a profit target for 500 pips. Now this has moved 900 at 1500 on the 1st of December. This is another supply demand support resistance zone. This 1500 hour has moved 615 pips. The 1600 hour moved 1,000 pips. Combined, they moved 1,500 pips. So when we get into the session range, we're going to train you how to understand that this is the bottom of the session. This is the top of the session. Now, if you combine that with the hourly volatility, we know the 1500 hour has not moved less than 500 pips. So now we can enter a trade here and then set a 500 pip, 300 pip profit target. And then we can start saying, well, we want to use the correct risk management and money management in order to meet your goals. This 1500 hour went 1,000. This 1600 hour went 700. So you see the advantage of knowing the hourly volatility for each hour during the New York session range, or whatever range that you're going to trade. We trade the New York session, and we can make videos. If you want to see videos on the other sessions, we can do that. Right now we're going to be training on the New York session, but you can use this knowledge in order to give yourself a great advantage on every session that you trade. The New York session is going to have the most traders, the most volatility, because it's the London and the New York overlap at 1300. So as you look at this data, we're going to give you a link to all of this data, this gold hourly volatility data, and we're going to make another video showing you how to use those for the beginning of this year. And then what we want you to do is go and practice what we just did right there on some charts. So you'll have the links to these charts so that you can see the hourly data, and you should probably open up a TradingView account. Or if you have other trading software that you're comfortable with, pull up the software and pull up the charts and do this practice yourself. And then you'll get a good understanding of how to practice planning your profit targets and then knowing what to look for. So we just did an hourly specific example. You'll be able to plan your entry, plan your stop loss, plan your trade, your pip value, and plan your profit targets. So this guide will be made available to you. Go over to our YouTube channel. As our YouTube channel grows, be the first to subscribe, and then check back for more videos as we continue to build excellent traders. Impact Trading Services. See you on the next video.